Good morning, esteemed guests and participants from across the globe. Myself, CA Shweta Goyal, Secretary, Sustainability Reporting Standards Board of ICI, would like to welcome you to the today's webinar on BRSR Best Practices Learning from Common Reporting Errors. With the rising importance of sustainability reporting, the BRSR has become a cornerstone for organizations seeking to transparently communicate their ESG performance. However, companies navigate BRSR's detailed framework, common reporting challenges often arise. Addressing these errors is essential for accurate, credible disclosures and for building stakeholder trust. Through this session, we aim to equip businesses with insights into the best practices for BRSR compliances, which will help you in improving reporting quality and enhance your sustainability disclosures. Today, we have an expert speaker with us, CA Ankit Maheshwari ji. He is a well-known speaker and distinguished chartered accountant with over 15 years of experience across various geographies, an expert in integrated reporting and BRSR framework for large listed companies in India. He is a special invitee to the SRSB board and head technical reviewer of the research committee. Ankit sir has authored publications on financial reporting practices and actively advises on government initiatives in Rajasthan. His research and mentorship have significantly impacted the finance and accounting industry. Sir, we would like to welcome you on behalf of the SRSB team.
Thank you. Thank you so much, Meta ma'am. Should I take it forward from here?
Yeah, please, sir.
Let me first thank you for, keeping this session in such a short span of time. And my special thanks to Chindu Manish and all team of SRSB who have been day
SRS.
in, day out working with the regulators to make sure that, the best practices actually eventually reaches to the stakeholders. Let me, this is a very power-packed session since we are talking about all commonly found errors in a BRSR perspective. It itself is a vast ocean where I think everybody of us has to dig down and find out uh, what are the commonly reporting problems and practices with respect to BRSR. Also, in line to the regulatory changes which has been happening. As of now, regulator is not very keen about looking into the non-financial sections of the annual report, be it integrated reporting, be it BRSR reports, be it even the other parts of the annual reports. But regulator now sense a criticality in terms of checking out what could be possible instances of greenwashing, wrong reporting, erroneous reporting, and with SRSB and with the other committees of ICI, we all together have gained a vast experience of dissecting how these errors eventually reaches to regulator and how regulators takes an action on it. So we'll straight away go to the session. I'll just give a very quick overview to all the participants who have joined from here, be it, be it what BRSR is, what is happening with BRSR 4 at international level, how the framework and regulator is aligning uh, the BRSR to the globally reporting frameworks. We'll discuss that, and then we come on the commonly found errors. So I'll just quickly share up with my presentation so that everybody is on the same page. I'll be happy to take lot of questions, Manish and Chindu. I'll require your help too because I don't think I have the you know dashboard where I am able to receive the questions. So whatever questions you receive, keep on posting it. We'll hands-on resolve it. I
Sure,
want
sir.
all the participants to be very participative into it. Let's not have a monologue here. Somebody deliberating over the errors. We want what are the problems which industry are facing, and we together will try to solve these problems uh, with you. So in terms of BRSR, I think everybody is aware about that. The entire BRSR is divided into three sections. One is the general disclosure, the other is the management and process disclosures, and finally the principle wise disclosures, where The regulator has aligned to all the 17 SDGs to each of the principal and have solicited expects companies to disclose on all these nine principles and 17 parameters of SDGs. So, in terms of not only, I would say, these disclosures or the BRSR disclosures, it's about the essential and leadership indicators also, which needs to be taken care. And with all essential indicators, one commonly reporting error which we found in SRSB is that companies, even in essential indicators, are reporting on comply or explain basis. So this is a regulatory report, and how regulator has targeted this report, we will try to find this out. But it's a regulatory report. Companies are not expected to disclose on comply or explain basis. Still, if a qualitative disclosure needs to be added to any KPI, it is acceptable, but the quantitative disclosures should definitely come out. And if in case if they're not coming out, then only a qualitative disclosure is required over it. So entire report divided into three sections: essential indicators, leadership indicators. That's what the entire framework is, and I'm expecting that all the audience who have joined are well versed with what exactly BRSR is. Because we will only go on the reporting practices, otherwise it becomes very difficult for us to dissect in 1.5 or 2 hours to eventually reach to some kind of conclusions. Uh, in July 2023, India came up with BRSR core framework, which is an important regulatory change in which companies were expected to take three very critical things. One, the mandate of assurance, right? And India is one of the first countries who has taken a reasonable assurance mandate on their select non-financial disclosure and sustainability disclosures, specifically on nine core KPIs of BRSR. So on this, you are expected to take a reasonable assurance. However, companies, the top-notch companies, the companies which were, top in terms of market capitalization, they decided to go ahead and take up a voluntary voluntary limited assurance for some other KPIs which were not a part of BRSR core but a part of BRSR. We'll come to know as we progress with the session. But one thing is sure that India with this BRSR core coming up has a lot of challenge also in terms of capturing the value chain partners, where now Indian corporates, at least top 150, are expected to report the top the nine KPIs which pertains to BRSR core, and they have to make it a part of their annual report. So that's another important change which came in July 2023 with the assurance mandate. Eventually, if we have to dissect this entire scenario as to from where this BRSR is coming up, then I must say that India was on the verge of preparing a business responsibility reports. The business responsibility reports eventually got converted to BRSR in compliance to national guidelines of responsible business conduct. Parallelly, in 2017, the regulator expected Indian companies to voluntarily come and publish integrated report also. Integrated report on a global level were erstwhile prepared by IIRC Foundation, which is the International Integrated Reporting Council, and which eventually got converged into Value Reporting Foundation and then the IFRS Foundation. So now the integrated report worldwide are driven by a global framework which is called the IFRS Foundation framework, and now on S1 and S2. IFRS S1 and S2, India is trying to align to both these standards which has come out with respect to sustainability and climate force disclosures. So a lot is happening on a global level. So if as a participant, one thing which we need to understand on a global level, the world is aligning to integrated reporting standards also. The world was already aligned to certain standards like GRI and CDP, but that's part number one. And IFRS erstwhile used to be a financial reporting standard setter, now became now also became a non-financial reporting standard. However, Indian context BRSR is partially aligned to what IFRS is prescribing, or IFRS Foundation is prescribing a framework. While India developed this framework, India benchmarked the other global frameworks and tried that we are able to accommodate GRI, CDP, all the globally recognized frameworks. And that is when you look into the advisory from the stock exchange, the National Stock Exchange, for each KPI which you are expected to report it to BRSR, one thing is sure that you will also find a reference to the global standard there. So we'll try and dissect all these things. But as a part of opening remark, I think we are still into a very evolving phase. The country is into a very evolving phase with a lot of challenges in their hands, specifically in terms of three, four things. One, the value chain partner reporting, where Indian corporates are expected to report 75% upstream, downstream of their value chain. Two, in terms of assurance and assessment, the country really needs to gear up and think about what level of assurance and what KPIs to be assured. Three, in terms of data which we are capturing pertaining to energy, water, and waste, specifically to non-operational sites. These are again some pain points which companies have faced while they were preparing this BRSR report. See, eventually this report is nothing but an outcome. So possibly we have just, the entire team has just evaluated the outcomes and not the source and the inputs of what companies have been reporting. It's more like an ex parte assessment which the entire team has done. And there might be certain logics of companies not following the most appropriate practices. But the idea of the entire session was that inevitably nobody should miss on reporting the right parameters. So that has been the I have set up the opening tone. I am happy to take your company's reporting challenges and address all those questions. But we have prepared a set of questions from starting, that is your general disclosure, to your management and process disclosure, and eventually your principal wise disclosure. We'll try and dissect each and every commonly found error in a KPI into a BRSR report, demonstrate you with illustrations. Nothing against any particular company. The idea of the session is always and always to, make sure it's a closely held session. So to make sure that eventually each and every company in India which is preparing a BRSR reports it to best reporting practices, reports it to a practice which is above the par. So happy to take all questions and let us, we have our first question, and I'll be happy as as moderators Chindu and Manish, if you can also tell me the name of the participant so that we can address them directly. So the first question comes: is it mandatory to report as financial year only? We as an organization report our carbon footprints to airports carbon international and DGCA as calendar year. Cannot we submit the same current year data for BRSR reporting? So I'll answer. There are two, three questions to it. The first question is it mandatory to report of it as financial year? In context of BRSR, it is clear that we have to report it over a financial year. So the guidance note does not gives us uh, any leeway or any way that we can report it over a calendar year. But as an organization, if you are not preparing a BRSR report, instead you are preparing a sustainability report, because a lot of organizations in this country are preparing two, three sets of report. As I told you in the beginning, One is the BRSR report, another is the integrated report, and some companies are preparing their ESG reports or sustainability reports or ESG metrics. In this, you can take an advantage of changing your reporting period. Eventually, we will try and align it to where your calendar year is aligned, right? We'll try and where your financial year is aligned, we will try and report it to the financial year itself if the financial reporting is done as per for a financial year. So the reporting period and reporting boundary needs to be in complete alignment with your financial disclosures. And the reason being, a lot of your parameters, say for example, the details of research and development expenditure, a capex which you have undertaken. In fact, the entire BRSR talks in context of the financial year, openness in business, shares in related party transactions. All these things have been in a financial, has been reporting on financial years basis. Thus, reporting it on calendar year basis will not help us into this. Also, while we calculate the intensities, right, where we have to divide it by the turnovers, where we have to divide it by the number of units in a particular financial year, I think this will become very difficult to, report it on a calendar year basis. But if you are exclusively preparing a sustainability report, that's when I will say that there's a chance that you can take this advantage of reporting it on a calendar year basis. Uh, Importantly, because this question has come up and a lot of companies are facing this challenge as to what should be the period of value chain partners which we should capture, because we are reporting it primarily on financial year basis. So companies have a serious problem, again a reporting problem, when they report their value chain partners. What should be the reporting period? Should it be, I have deliberated with a lot of large companies, probably almost all the conglomerates which are present in India, and a stand which we have voluntarily taken as of now. Regulator is mum on it that we will capture the 9 months data of a value chain partner and try and extrapolate that data to next 3 months. So all these things are there. There is a lot of ambiguity into certain things. We'll try and clarify it. But as of now, we are reporting it on financial year basis. Mr. Jyoti Bhattacharya, I hope I'm able to solve this question for you. We move ahead. We move ahead on, now the commonly reporting errors, and we will come on each and every point. First, I think we have already discussed the reporting period. Now let's start discussing the reporting boundaries, right? So if you look at your general disclosure and you look at your KPI 13, which defines the reporting boundary, I have given two snapshots, right? One snapshot says all the disclosure under this report is made on a standalone basis, that is only for the entity, or on a consolidated basis, that is for the entities and all entities which form part of consolidated financial statements. Here, the regulator clearly expects you to give a straight answer whether you are preparing a BRSR on standalone basis or consolidated basis. If you look at the report of Reliance Industries Limited, you realize that they are preparing it on standalone basis. If you look at the report of Unilever, you will realize that they are reporting it on consolidated basis, which means that both the practices are correct, right? However, there are certain challenges where you have too many operational units. For example, in a bank, where this bank particularly writes that we are reporting it for our offices and branches across India. Now, the problem is the bank failed to answer whether they have reported it on standalone or consolidated. So you have to take a stand on it. Like if you look at another example, which comes from another large entity, which says that the company has disclosed both on standalone and on consolidated basis. So whether this is also a right practice, our stand together is, please come out specifically talking about whether you are reporting it on standalone or consolidated. There is a possibility, especially in companies like Tata's and those who are having multiple entities, multiple joint ventures. There exist a foreign joint ventures. There exists a problem of consistency in reporting period also and in reporting boundary also. There, if there is an exception, then that exception needs to be disclosed with the KPI itself. So if I have to prepare this disclosure or we have to do this, we will, in the first tense, right, which is the bank's company's reporting boundary, we will clearly specify that we are reporting it on a standalone basis unless specified. Now, in case as a bank, I am not able to capture some KPIs specifically pertaining to water and waste, because these banks and their branches operate in extremely rural areas also, where there might not be any systems which might be developed. In that case, when I am reporting a water or a waste KPI, I might extend it through a footnote or a qualitative disclosure that these are the branches or these are the number of branches or this is the percentage of operations I have excluded from capturing my water and waste KPI. So this is point number one. Point number two, if I am reporting it for the second illustration, where the company has taken up a stance that we will report it on stand-alone or consolidated. Company has primarily reported it on consolidated basis, but company took a safer approach in mentioning that we are reporting it on both basis. We have to, even if you correlate it to XBRL filing, I hope lot of my participants here would have also been in touch with their secretarial teams. XBRL gives you only one option. Either you say standalone or you say consolidated. So in second option, we will choose an option of reporting it over a consolidated basis and unless otherwise specified. So for a KPI in which I had to exclude certain subsidiaries, I have not put up another reporting boundary, but you can go back and check the reporting boundary of HUL. So in HUL, you will realize that they have reported it on consolidated basis and they have not reported it for specifically two subsidiaries, one pertaining to Nepal and one is not their wholly owned subsidiary. So in that case, the KPIs which were major KPIs to that, they have only put up a footnote to it. Long story short, I think we have to conclude this point of reporting boundary. Out of almost 200, 250 reports in SRSB, we together have evaluated 50% of the reports have this problem of rightly identifying their reporting boundaries. Please, in your company, develop this practice. If you want to take a conservative approach, take a standalone approach and with a KPI annex it. If you are sure, then take a consolidated approach. And if there are certain exclusions, please report it with these specific KPIs. I think that shall solve the purpose. But the top point is just not acceptable where the companies in second, third year of the mandate are still not saying that whether they report it on standalone basis or on consolidated basis. Hopefully, with respect to reporting boundary, we are clear. In case you have any specific question pertaining to reporting boundary, I am happy that you send it to Shweta ma'am, Manish or Chindu. We will take that question in next. Chindu, do we have any questions pertaining to reporting boundary?
No, sir.
Okay, I move ahead. Let's look into the next point. The next point pertains to the general disclosure and which talks about assurance, right? As we know that now top 150 companies were expected to take a reasonable mandatory assurance. India has assurance standards pertaining to which is specifically the entire team which is sitting on your table has worked very hard about it in making changes and rolling out sustainability standard for assurance engagement 3000. They're also working very closely with ED 5000. They have a standard for assurance of greenhouse gas emissions, which is the standard 3410. So India took a mandatory. So this year, I am talking about 2023-24. 150 companies were expected to take a mandatory reasonable assurance, right? Now, this reasonable assurance had to be on the 9 KPIs. I hope you are aware about the 9 KPIs. If you are not aware about those 9 KPIs of BRSR core, please write to us so that our team sitting there in Delhi can show you what are the KPIs which needs to be assured. But primarily it pertains to GHG, energy, water, waste, job creation in small towns, openness in business, right? Procurement from sustainable procurement from MSMEs. All these 9 critical KPIs were expected to be assured. Now companies have given a disclosure. I have two very interesting disclosure. The above disclosure says reasonable assurance on indicators covered under BRSR core. So one thing commonly which everybody has done right is taking up a reasonable assurance on indicators covered under BRSR code. This is the righteous practice. And now companies went one step ahead because ICI had their standard and the assurer were looking at the standard 3000 and 5000 internationally ED 5000, the draft of it. They said, and a reasonable oblique limited assurance. I don't think that as a assurer, you should on a per select KPIs, either you take a stand of a reasonable assurance on BRSR core KPI and limited assurance on rest other KPIs. But the additional indicators which you are getting it assured, the additional indicators which you are getting it assured should either be reasonably assured or limitedly assured, but it cannot be both. It cannot be both because the audit procedure extends to the entire scope of engagement, not each KPI. Hence, a stand like this, I am not saying it is completely wrong, but a stand in which a company says that they are either taking a reasonable assurance or a limited assurance is something which might not be acceptable to regulators in the near future. Thus, I have given a disclosure which is the second snapshot, which is very specifically saying that the companies have taken reasonable assurance on BRSR core and limited assurance on other parameters. In fact, following this company's report, they have given up a table of 9 core KPIs, what kind of assurance procedures were implemented, what were their critical findings to this, and contrarily, for a limited assurance, they have also given their KPI. But for each KPI, it will be inappropriate that in a footnote to the user of this BRSR, you are saying this one is limited assure, this one is reasonable assure. Last thing, there was no scope for top 150 companies to take up a voluntary or a limited assurance, they were expected to take up a mandatory assurance on the same. Hope the assurance point is clear. Please put up your questions to assurance points, and then okay, we take some other questions. Okay, from Muskan, there is a question. If a company is following a calendar year for its financial, then why would be reporting year basis on BRSR? So eventually you can define a reporting period, and since this question is coming multiply, right? Let me also take you to the what law exactly specifies. Just give me a second. I will change my screen, and we need to go back to the law once again, and let's just try to dissect what law exactly has uh, something something for us, right? Just give me a minute. So now I share you the guidance note itself. This will give you some kind of a clarity if it was not clear from my answer. This is the SEBI's guidance note. I hope it is visible. Chindu, I hope it is visible. The SEBI guidance note.
Yes, sir,
Require
it's
your
visible.
help into it.
Yeah, it's visible, sir.
Okay. So now it says the term reporting period refers to the financial year for which BRSR is being prepared. Right? So the word and the terminology they use is a financial year. One. Two, still, if I look at the other globally operating frameworks, right? And if you are preparing your financials as per a calendar year because of being a subsidiary to a some parent company and following that kind of a practice, then maybe you can take it up a calendar year. Otherwise, the guidance is pretty clear, which talks of the financial year. And if your financial year is your calendar year only, uh, we are happy to take that, take that reporting period. Hope Muskan this now clarifies, right? If you are following calendar year for your financials, you can go ahead preparing BRSR on the calendar year itself. Cannot we submit the same current year data for BRSR reporting? I did not get your question, Mr. Jyoti Bhattacharya. In case you can, just elaborate it. But I think we have done enough deliberation. We have question from Amit Kheruka, who says preparation of BRSR is a responsibility of a CA. For non-financial data, we are dependent on other financial professionals. ICI standards get attracted. Care needs to be taken. So in case, Amit, I think you've put up a very interesting conversation. So naturally, the responsibility of preparation of BRSR is of management, just like the responsibility of preparation of financials were of management. Now, chartered accountants and this entire uh, assurance, or now this might be even changed to assessments, is not profession agnostic. That means chartered accountants are not the only people who will be able to, give assurance. Any company which is in compliance to International Standard of Engagement 3000 or Exposure Draft 5000 or I for GHG 3410, they can give this assurance. So, but if you are a chartered accountant and giving assurance based on the standards which sustainability standards I have been issuing, then as a professional accountant, you are expected to comply to the ethics and the code of conduct which has been prescribed. The standard itself talks about it very clearly that all our code of conduct, the primary charter, the Chartered Accountants Act, if you are giving an assurance as per the Chartered Accountants Act and as per the assurance standards of SRISB, then the code of conduct certainly applies to you. I hope I am able to clarify it. So we have to be very careful while issuing any kind of assurance. Preparation is not our responsibility. Preparation is management responsibility, and management may choose to outsource this to us. We have Gaurav's question. Any update on latest circular from change from reasonable assurance to assessment? Gaurav, no updates. No updates. Chindu, if you have any update from SRSB, whatever the comments we were submitting,
No, sir, they have not updated yet.
they have not updated it, Gaurav.
They are
From
currently
Balaji
working on the
Vedyanathan.
ESG rating providers. SEBI is focusing currently on that.
Sorry, Chindu, you are less audible. Can you be a little louder?
Yeah. So I was saying that SEBI is currently focusing on the ESG rating providers.
Yes, now they have come up with the October last week only. They have come up with this ESG rating thing. But as of now, I think Gaurav, our assessment to this entire situation is assessments will come parallel. India will now not backtrack from it. Neither India has a standard of assessment. I think we are expected to give this assurance, reasonable assurance. In fact, this is in alignment with other reporting frameworks also. So if you recall in integrated also, people are taking limited assurance on their select non-financial parameters, right? So I don't think this is going to change. We have next question from Balaji Vedyanathan. What is the international practice on assurance? I think we have discussed it, sir. It is ED 5000 and India has adopted the international standards, which was ISA 3000, which was pertaining to the non-financial information, historic information, and ISA 3410. Our board worked very extensively in rolling out the standards in Indian context, which is the SSAE 3000 and 3410. But internationally, we are completely in alignment with it. If today we have to benchmark to some assurance standard, Balaji sir, I would say that ED 5000 is almost on the verge of rolling out. Chindu, you know the status of ED 5000?
So not yet.
Not yet. But as of now, we have not taken any stand on ED 5000, right?
Yes, yes. We
So,
have
sir,
just
we have. Mhm.
so
You're
we have
saying
just
something?
submitted our inputs only.
Okay, fine. But internationally, you can still benchmark to ED 5000. Is sustainability reporting or BRSR reporting part of CA syllabus? I think some students have also joined. I am not sure. I am genuinely not sure, but it will. There are some short-term modules, videos, and institute is committed to build it into the curriculum. Financial reporting plays a very important role with non-financial reporting and the correlationship. In fact, when you look at IFRS S2, you realize this that the entire on a global level we are trying to report non-financial parameters in a way that the companies are able to demonstrate their financial implications for each non-financial KPI. What is their correlationship with the financial reporting is what IFRS S2 is all about. So don't worry, not only in the student curriculum, sustainability next 5, 7, 8 years will constitute 30% of the institute's responsibility. We take the next question. If stakeholder is not cooperating, uh, how can we give assurance? Prajit. So my if that kind of a you know situation is what Prajit we are expected to face, that the stakeholders are not cooperating, then I think we have to develop a practice of giving a qualified or a modified assurance opinion is what my thought will be. It is a limitation on scope, similar to a limitation on scope which we used to have while we were doing financial assurance. In non-financial assurance, if that's the case, then I think your opinion has to be modified or qualified accordingly, is what my thought is. However, we do not have any prescribed formats of giving a modified or qualified opinion. But yes, as of now, I have also personally not come across any modified qualified opinion. But the standard expects you to give, and the standards completely talks about it. The next question comes from Supriya, and then we move on the next topic, and that's the last question from this section. Otherwise, we will miss on a lot of things. In case you are preparing ESG report, can you be assurance provider? Not at all. If you are a chartered accountant preparing a ESG report, ideally even the standard does not permits you to do that. Forget preparing a report, there should not be any conflicting interest also. For example, in case if you are an internal auditor, right, to an organization, then you cannot give assurance on non-financial parameter. So Supriya, preparer and assurer has to be different. The conventional principle of assurer or our profession chartered accountancy applies to preparing and assuring. These has to be done independently. Maker checker concept exists here also. I hope I am able to solve it. The last question, sir, if client uh, assist preparation of BRSR report to CA, whether same CA, I think now it is clear. Both the questions are same. This question also pertains to whether the assurer and the preparer, or if you are even assisting your client being a preparer, can you be an assurance? Absolutely clear to everyone. This has to be two different entities doing it, and I hope this will answer it. There's, the standard says it very clearly. Our bylaws do not talks about sustainability, but here the SSI 3000 clearly talks about, even I am telling you, even if you are an internal auditor, you cannot be an assurance provider. I hope we have to end this here so that we can talk on more important things also coming henceforward, going forward, right? I go back to share my screen and back to the presentation. Okay, so I hope now we are clear about assurance, right? Next, general disclosure, point number 17. Commonly found error, and this is, the first one is a wrong disclosure, and the second one is an overstatement, right? Where, companies like bigger companies who are overly governance conscious, sometimes we realized it that they are putting up more qualitative disclosure, extra data, which is expect more than expected from the regulatory point of view. But the above one is absolutely wrong. In no case the cumulative turnover of the products can cross 100%. I hope this is clear. Entities were expected to report 90%, and the products which constitute up to 90% of their turnover, right? In second case, had the company only reported sale of steel products at 94%, this would have sufficed. But company reported some other products also, and I think this was not required. This is a over disclosure, which is their income from services, other incomes, which was not required. The idea is what product constitutes what kind of emissions, right? And that is why they are asking you, okay, the products which you are selling, tell us the 90% composition. Eventually, in times to come, they start correlating it with the life cycle assessment of the products which you are doing, and then capturing and reconciling the emissions. So make sure the above one is wrong, the second one is overly disclosed. But I have seen this problem, and we have seen this problem in a lot of companies, that they were not able to dissect this point. The idea was to capture 90% of the turnover. What are the products which majorly attribute to the 90% of the turnover? I hope that's clear, right? In case any point pertaining to this, please let me know. We go ahead. This is, as of now, we are only on general disclosure. but some critical things, which is point 25 and 26, right? Point 25 uh, talks about the complaints and grievances, right? And here we have found that maximum companies are not able to quantify their data appropriately, right? Some commonly found errors. One, the categorization of stakeholders groups, right? So my first point is the categorization of the stakeholder group needs to be in alignment. See, that is why it was important to talk about integrated reporting, because we do with our 25th and 26th points are also disclosed in integrated reporting, right? The 25th point talks about the complaints and grievances in general disclosure. The 26th point talks about the material issues pertaining to an entity. I hope you recall it, right? Now I am saying on 25th, if you have done a stakeholder engagement activity as per an integrated reporting, you have to separately do a stakeholder engagement activity as per ESG reporting. Lot of companies have mistakenly, and I can show you lot of examples on it, where company says look into our double materiality assessment matrix of integrated reporting. Can material issues pertaining to integrated reporting be same of material issues pertaining to BRSR reporting? Can it be possible? Integrated reporting is a larger framework, has a larger coverage. When I say they have a larger coverage, I intend to say that the stakeholders of integrated will be different, and the stakeholders of and the material issues of integrated reporting, which you are publishing as a part of your annual report, will also be different, right? Which means that you have to be very careful if you are trying to correlate your integrated report with your BRSR report. Very careful. Now, identification of stakeholder groups, the mode of engagement. While I was talking about integrated reporting framework, which all capitals integrated reporting framework expects you to demonstrate? Let's go back. So, because I'll tell you, lot of these companies, look at the largest companies, right? They are referring it to the uh, stakeholder and materiality assessment of integrated reports, and that is one commonly found error, which I think India as a whole have to look into whether they are able to comprehend the integrated reporting framework or not, right? I'll come on it. I'll come on it. Okay. So one, when we were talking of integrated reporting you were expected to demonstrate six capitals. Yes, financial capital, human capital, manufacturing capital, intellectual capital, natural capital, social and relationship capital. Now, some of its components are also common for BRSR, but I still feel the larger, or a framework which gives more holistic view, is an integrated reporting framework. It's a voluntary framework. I am putting up a very important point to all of you, that it is a voluntary framework. Look at SEBI's advisory in 2017 pertaining to integrated annual reports. They say this needs to be voluntarily adopted by top 500 companies. Now, the BRSR framework is a regulatory framework. This is driven by SEBI LODR. This is driven by National Guidelines on Responsible Business Conduct. You do an XBRL filing. The XBRL file reaches to the regulator. Please make sure that your BRSR are non-compromising. You can compromise on your integrated reports, but please don't compromise on your BRSR report, specifically in terms of materiality assessment, stakeholder engagements, identifying the stakeholders' data. So we have given you some snapshots which specifically says, where you will see that the framework expects the investors and shareholders to be two different entities and two different stakeholder groups. Some entities are using it as a common stakeholder group. One top reason of doing this is because in their integrated they have categorized their stakeholders like this. Second, in terms of recording the number of complaints, now they say that the complaints which they were right from communities, they are putting dash. Dash means not applicable or zero or nil, I don't know. From investor other than shareholders, they say nil, right? From employees and workers, they again say dash. So companies are, see, look at it. It says at some places it reports nil, at some places it reports zero, right? That's another problem. Next level problem. They say number of complaints filed during the year 3, pending at the end of the year 15. Maximum errors were found on this KPI where stakeholder complaints were not, the data pertaining to stakeholder complaints were not matching. I can give you so many examples to this, right? But eventually, I think this data, please go back and look into this data, capturing of this data. I have 2 points to say into it. One, your stakeholder engagement and of an integrated report may be different from a stakeholder engagement from a ESG report. Two, please don't compromise on the advisory which SEBI has issued, the stakeholder groups which SEBI has issued. Minimally, you have to adhere to those stakeholder group, and if you are exercising the option of others, then you have to specify which kind of stakeholders and why. Why a particular stakeholder is more relevant for your business. And please stop correlating this to your integrated report at least. Fill this in an integrated, you can still go back and say that we have reported in a BRSR report. Or you can prepare a visually aided section of a stakeholder engagement considering the stakeholders which are in your BRSR. My point is that the BRSR has to be non-compromising, and we have found problems in terms of identification of stakeholders, in terms of resolving the complaints, in terms of number of complaints which has come up. This data has been completely mismatched from regulatory point of view. Second, the next is the materiality assessment, right, which we have to look into to very large companies. One says, please refer to the section stakeholder engagement and materiality. I have told you, we have to come out. See, the idea of this section, if you recall point 26, what all it gives, it is the backbone of your entire BRSR. If this point 26 is inappropriately addressed, I think this might not be acceptable by regulator at some stage. What all it is saying? It says, please read the table. It says, please talk about material issue identified. Now it also talks about whether it is a risk or an opportunity. Please talk about it. So I am sure the same format companies might not be following in their integrated also. It says, what is the rationale that you have identified it as a risk or an opportunity? For example, a climate change can be a risk to a manufacturing company, say a oil and gas company, but can a climate change be an opportunity? Yes. For all these renewable companies, Wari, Borosil Renewables, so many renewable companies have come up with the IPO. Please go and read their draft hearing prospectus. They talk that climate change is an opportunity for them. So a particular material issue can either be a risk or an opportunity or both. for an organization, and by not disclosing this, you are keeping your stakeholder away from very critical informations to BRSR. Now, if it is a risk, then you have to talk about the process of mitigating that risk. Also, what all risk you include here, kindly get it approved from your risk management committees. It has been found a commonly reporting error, which we have found that the risk which companies are reporting it here, right? They are not in compliance with the risk management policy which they have uploaded on their website. And the financial implications of the risk or opportunity, whether this way, if there's an opportunity, then naturally, there has to be a positive financial implication and a negative financial implication. The idea is to correlate it to the financial impact, and top companies, I would say 10, 15 out of Nifty 50, they have failed to report this most critical part of general disclosure, and somehow they have been wrongly advised over, correlating it with their stakeholders' engagement and mortality assessment. So be very, very, careful to this. All your material issues pertaining to ESG should come here. I feel very, very worried also when I see that, companies are saying we have only come up with our critical material issue. So if a issue is identified, material issues identified, all your material issues should become a part to this table. Hope I am clear. Now I take some questions because we have primarily done with the general disclosure. Any specific question pertaining to general disclosure, I'll take in next 2-3 minutes, right? So we go back, right? We have lot of questions coming up, right? The first question, if I prepare the ESG report for my organization, can I retain a preparer? Can be an internal auditor. I don't find there is any conflict of interest. Okay. Unless you are assuring a BRSR, you can be a preparer. That's what uh, my point is, in principle. However, see, there has to be, you have to give a declaration of some kind of independence in your internal audit reports, because what you are preparing for them, right? As an internal auditor, you might be assuring in some way also, right? As an internal auditor, in the capacity of an internal auditor. But I don't see a direct conflict of interest here. As of now, I don't see any advisory also. As an internal auditors, we prepare a lot of things for the client, and there is a third party assurance which is being done. Can we undertake BRSR assurance from an entity who has implemented CSR projects of the reporting entity? Can we undertake BRSR uh, core assurance from an entity who is implementing? These questions come from Anurag Khandelwalji. Uh, so you can take an assurance who is implementing CSR projects of, see if there is a conflict of interest because you have written CSR projects of the reporting entity. That's where my concern is. If these CSR projects pertain to the auditing entity, right, or through the auditing entity, then certainly not. But I did not understood what is the CSR projects of the reporting entity. You can take up the assurance subject to you or your related entity should not be beneficiary of any of the CSR programs which these companies are operating, right? If I am not able to understand this question, please, Anurag, request you to please write it up. I'll maybe, try to have a deliberation around it. Sir, for a company involved in stock broking, should we include grievance mechanism for communities? Yes, there might be some grievance. Uh, eventually, lot of companies, uh, Kalai Yarasi A lot of companies eventually are failing to do this. I see a lot of insurance companies saying that water and waste is not applicable on us. Reporting of value chain is not applicable on us. Uh, Openness in business is not applicable on us. So I don't think this is not applicable. There might be some community grievances. In fact, the office in which you are operating, right, as a stockbroker, there could be some grievances of your neighbors itself, right? Look at the CDP GRI. If you recall, they give us a form as per CDP. You have to go to your neighborhood and get it filled, right? That your neighborhood doesn't have a problem to your operations, right? There could be a case the stockbroking company is operating into some residential area and communities might have grievance to it. So I hope I am able to answer this very specifically. You have to have a mechanism also and you have to capture it, right? And one mechanism I told you in a stockbroking only we advise that at least take your nearby areas grievances coming up. Shivangi has a question. Please confirm if the complaints in this section for the employees and workers are supposed to exactly match with P5.6 essential indicator with and for customers with P9.3. Uh, I think they are two separate points, Shivani. No, there, there we are capturing complaints from the customers, right? Here we are capturing from employees and workers. I genuinely don't find a correlationship between them. Why will they match? I still don't understand it. But in case you have any further question to this, they are not expected to match. Next question comes from Chandan Lahoti ji. Whether last reporting was on compilation of information or quality assessment issues identified. Whether last reporting was on compilation of information. Chandan Lahoti ji, I did not understood the question. Please request you to please uh, write this question, right? Complaints will be cumulative, right? uh, no, the complaints are for a particular financial year, and naturally, if there are any complaints received and if there are some unresolved, the unresolved number remains to be cumulative, Prajit. So if some previous unresolved are still coming up, it will be reported. Otherwise, you can capture it for a particular financial year. uh, Next question comes from Abhijit Pawar. What is the difference between investor and shareholder? Naturally, you might have both on your boards. You might have a private equity also on your board. Uh, so there might be some, large chunk of investors which might not be considered the idea of a shareholder. Here is a retail kind of a shareholder. You might have large chunk private equities already invested. There could be a case that you are not a listed entity and you are still preparing a BRSR in which your investors and shareholders can be uh, a little different. Investor can be your lenders also at some point in time who are invested with the business. Abhijit ji. Now we have Prajit's question. What will be the consultant roles as far as materiality assessment is concerned? Do we need to identify risk and opportunities? Prajit, very important question. Very, very important question. The consultants, the chartered accountants have a critical role in rolling out materiality assessment. Now we are carrying double materiality assessment. I hope you know the double materiality assessment matrix. Primarily all the material issues. So what we do generally as a consultant, and here's a huge opportunity also. Lot of people are, directly pitching materiality assessment as an important part of BRSR or integrated reporting. In such a case, I think we have to look into one, the rolling out of first, we have to identify the universe of the material issues. Plus in 2024, we have planet related material issues coming up. In fact, surprisingly, if you see Tata's policies, right, these policies were made in 2010. They also need to upgrade these policies to the latest planet related material issues. So as a consultant, you have to work hand in hand It is more like a project management service where as a consultant you will prepare a list of the universe of the material issues. You will compare it to the peers. You will roll out the stakeholder engagement surveys. You will give your client a dashboard where he is able to look into the prioritization of the material issues. You will help him prioritize it, document it, and then finally report it, be it a single materiality issue or be it a double materiality issue, where you are not only taking a material issue which is pertaining to your organization but pertaining to the globe also. So uh, yes, once you identify this, the scope extends to identification of risk and opportunities pertaining to it. The scope also extends to alignment of the risk management policies of these companies. The scope also extends to taking and how do you present these sections in BRSR, integrated and management discussion and analysis, right? I hope I'm able to. Gunjan, very important question. Gunjan from Jaipur. Hi, Gunjan. I am also from Jaipur. I have started my own practice recently. How can I get clients on BRSR? As only few hundred companies are mandatory to report this. Also, how knowledge of AI tools is mandatory, important in BRSR and reporting. Okay. And Shivangi also have put up the same question. I think they are attending this session jointly, or maybe some confusion. So Gunjan and Shivangi, I think the answer to this is you have to assess this framework very smartly, right? And you are from Jaipur. I am telling you, being from Jaipur, at least uh, more than 100 companies in Jaipur are preparing sustainability reports, not BRSR reports specifically. But why? The question is, why will a company which is a non-listed company or which is a small company prepare some sustainability report or BRSR report, and uh, how can somebody reach out to them, right? So step one, and I'll crisply answer this. BRSR is mandatory for 1000 companies as of now, not 100. Look at the total quantum of companies which are getting listed daily. This shall extend one to the larger companies also. Second, where I am very optimistic and I am Chindu constantly deliberate over it, that India has taken a mandate where a large company is expected to report to BRSR and all their value chain partners, which is, so if you are a client to Hindustan Unilever, or if you are a client to Reliance, or if you are a vendor to Reliance, right? Maybe you are small, but you still have to prepare it, because value chain mandate says as Reliance, you have to capture the emissions for what you have done. So Reliance have to capture your emission in their annual report, is what BRSR core is. That means that is why when I talk about these 100, 150 companies which are operating in special economic zones and the nearby industrial areas, they are value chain partners to large companies, and these large companies are expecting that they prepare their reports, 9 KPIs which are specified by BRSR, and that is why they are looking for somebody who can help them in preparing it, right? And in this case, they even do not have any systems built up. Suddenly, a large vendor has started asking. In fact, I have seen a situation where in Jaipur only we had a company who was a value chain partner to a German company, and they were stopped for from doing a transaction. They were the 30 years old customer, but since the emissions were not coming down to the targets which these large giants have taken, that thus they decided to not do a business. In fact, India has come on a verge where if European Union, since they are using CDP more, they are saying if Indian companies are not able to reduce the emissions, then we have to impose import duty. So all these things gives only one thing in my mind, that forget anything. If tomorrow a large company becomes your client, Munjan, and probably it might be your client, very soon they will start asking you these carbon data, your energy, water, waste, and all those 8 9 parameters data. So there lies a huge opportunity. The only thing is whether you are able to comprehend the opportunity rightly or not. Right? Okay. Then we have Mr. Nagarjun K saying, sir, is the BRSR reporting is a subset or a step towards improving ESG disclosure? Mr. Nagarjun, sir, India has one of the finest, I am telling you, on record, sustainability reporting framework. It is not a step towards improving ESG disclosure. In fact, it is ESG disclosures only in a regulated format where India is one of first 5 7 countries having a regulatory format to do this. And also that, the world was raising a lot of eyes towards us in terms of emissions. In fact, the Ayog CEO himself said that we are not even occupying 3 4% of the carbon space. Still, still India is looked down because, sir, Nagarjun sir, we have to understand one thing. The world, see what has happened in the Western world, right? The Western world has already been developed, and the world can only be developed after you do a certain set of emissions, right? You just can't go zero, carbon zero throughout. And that is why India took up, different step in Paris Convention where the entire globe is aligning by 2050 with a 1.5-degree climate change. India took a vice versa step by aligning themselves to 2070. 2070 was is India's target, and India says we will have our own journey. Now the irony of the world is if you emit, the entire Western world looks up to you. And if they are emitting, then sustainability is a hoax. So this is a common problem. But India has very smartly come up, and we have a regulated framework. We have a mandate of assessments. We have a mandate of assurance. We are not only reporting it on explain or comply basis. It's a fantastic journey what India has traveled in terms of BRSR, but still early days. And this shall extend to the smaller clients also. Now we move on. Okay, Shivangi has put up this question again, and I'll take her question. Employee and customer will obviously won't match with each other. In section 825, there are complaints for employees and worker. Okay, I am opening section A of the company Shivangi for you, right? And I am looking at the complaints which you are talking about. Yes, it has complaints for employees and customers will obviously won't match. There are complaints for employees and workers. Yes, there are complaints for employee and worker. Now I move to principle 5.6 essential indicator where complaints for employees and workers are there. Okay, let me go to principle 5. Moving to principle 5 for you, and we are looking at the complaints there also, right? So now these complaints are pertaining to sexual harassment, discrimination at workplace, child labor, forced labor, wages and other human rights related issues, right? Not necessarily, Shivani, this still matches. There might see this the idea of I think here the indicator 6, right? Now I'm able to comprehend the point which you are saying, right? Is eventually reporting it on all these 5 6 parameters. However, there might be still complaints pertaining to employees, workers, which might not pertain to these 6 issues. So 5 is very clear. Sexual harassment is clear. Discrimination at workplace is clear. Child labor is clear. Forced labor is clear. Wages is clear, right? And other human right. But there could still be a complaint which do not pertain to these 6 parameters. So don't worry in getting it matched. But in most of the cases, you might be, reporting it in all these six categories, right? So I hope now I am able to answer it. But the regulator is not expecting you to match. If there is a mismatch, there could be some other nature of complaints which might not be specified into the format here. I take Chandanji's question whether quality assessment, the way we do for a whistleblower, complaint fraud, etc., for statutory audit of closure of grievances, need to be done by assurance provider or just need to provide complaint of information as shown in one of your sheets. Uh, Chandan sir, I think Chindu, I'll require your help.
Yes, sir.
Chindu, can you open BRSR core mandate? What are, I think everybody needs to be clear. What are the parameters which needs to be assured? You have in your laptop, kya?
Sir, just searching it up.
Chandan sir, give me a minute. Give us a minute. Either of us will open it. 9 core parameters. Thus, we have to look into the core mandate, find it out whether this needs to be even assured or not. Chindu, should I find it out?
Yeah, I got it, sir.
Okay. Please share it. I am stopping here, expecting you to share it. Chandan sir, now we look into it. What are the 9 KPIs which are expected to be assured? And not only Chandan sir, since beginning we are talking about this BRSR core. Let's at least have a look what it talks about. Number one, it talks about GHG footprints. So this needs to be assured with reasonable assurance. Let's go down, Chindu. Second, it talks about water footprints. Third, it talks about these are those KPIs which needs to be reasonably assured. Third, it talks about energy footprint. Okay, go down. Fourth, it talks about circularity. Embracing circularity is waste management. Again, 4 KPIs done. 5, it talks about enhancing well-being, employee well-being and safety, in which it talks about the spending measures. You recall the accidental insurance, health insurance, paternity, maternity benefits, and the lost time injury rate, which companies are capturing. Again, Chandan sir, your point is not coming up. Sixth, it talks about gender diversity. Complaints up now here, it talks about complaints on POSH. So if there are a grievance or a complaints which are pertaining to, uh, you know, POSH, that needs to be assured. So total complaints of POSH, can we go down, Chindu, and what all? Nothing. Then inclusive development, then fairness in engaging with customers, and here also it talks about instances involving loss of breach of customer data. These two nature of complaints are the only complaints, Chandan sir, which needs to be assured. Rest, whatever company is filling, uh, we are not expecting as of now any kind of mandatory reasonable assurance. Hope I am able to answer this question. So give assurance only on these two parameters on a safer side. If you want to take out other, we can. Let's go back. Going back to the presentation. Okay. I hope I am able to solve all the queries as of now. We are done with section A. We have one more last question pertaining to assurance, and then we end up the assurance story. Okay. It says, sir, while reviewing BRSR report prepared by client for issuing reasonable assurance, should the CA look up reports adverse otherwise put out by statutory government regulators in their respective website portals about the client? Uh, Whoever is asked is a very relevant question. So, but I am saying, see, the assurance approach is also prescribed by the regulator, right? So, uh, you just need to follow the approach and documentation which, as of now, the regulator has prescribed. The circular which was just opened at your screen had a assurance approach, and this was Subramania here, sir. So my request here will be just stick to it. You can't extend your procedures to that extent that you can go on the regulator's website. What all you will try to find it out. So if on all these 9 parameters, I don't think you will be expected to go to any open source as of now, right? I hope I have answered this. Now let's look into section B. Okay. I hope we are clear with section A. Section B talks about management and process disclosures. Now, these management and process disclosure, if you can envisage the format, talks about, policies, procedures, enlisted procedures, whether they are enlisting to your value chain partners, and P1 to P9 principles, which are written uh, horizontally as per the format, right? So one commonly found errors in terms of people talking about policies for and aligning them principle wise is fine, but one commonly found error which I found here, right, talks about two things, and this is very important part. Just like a material issue, I think maximum entities in India failed to disclose their targets, which is point number 5, fail to disclose their performance, which is point number 6, and fail to disclose the same in the director's responsibility statement. The Indian companies somehow have struggled to set up the targets, or maybe while I was interacting with top notch companies, we realized that in certain cases, companies were little conservative in not disclosing their targets. They have taken a conservative approach, but it's a statutory report. My suggestion here will be, I have given you a lot of instances. This entire section says when they are talking about what are your specific commitment and goals, they're not talking about any targets. They say we are committed to holding the highest principles concerning ethics, business sustainability, employee health and well-being, stakeholder satisfaction, human rights. Boss, where are the targets? And if we have not taken, then we should say that we have not assessed the baseline. If we have assessed the baseline, then you have to come about whether you have taken scientific based targets, SBTI, or some upcoming framework. One day Chindu only told me about some upcoming framework of target setting. Whether they have taken those targets. What are the targets? A target could be as good as gender diversity. A target could be how much emissions you aim to reduce. A target could be a long-term target, when, by what year you want to decarbonize. But can you say this? Now look at other slides. We will come on performance separately, but this is an important thing, right? This company says, what are the targets? They have said, yes, we have taken a target. What targets? I went through their entire BRSR report. I did not found any targets. For each principle, even if you have taken a target, you should have come up. Now this says that yes, company has taken some targets for 2025 and 2030, right? This is a better representation. However, I told you it's a statutory report. Please quantify your targets. Right? Because unless you quantify my fifth, my sixth, and my seventh point are absolutely related and are the heart of my BRSR or the stakeholder who is reading it. Right? Next, we go down. Okay. These are the targets. Now look at the performance. So you don't have targets, so you will not have performance. Also, a commonly found error. Company takes X targets and company is mapping performance against some Y parameter. For example, company took a target of gender diversity of 25% in their employees by year 2024, and eventually company now, while they're talking about the performance, are not talking about gender diversity. So your fifth and sixth point needs to be completely aligned. And if it is not aligned, then I think there's a problem. And I'll show you the alignment. We have a great example of one of the Tata companies who have very well aligned their targets, their performances, and the statement. So in performance, if you don't have targets, then you will subjectively write, all these things. This will not help. This will not help. Similarly, I'll come on this again, here the performance says that company is monitoring part of an integrated annual report. I don't want to repeat it. It's a statutory report. Please make sure whatever you are reporting is as per the format. Now, that's how a target needs to be defined. So company is clear for all their goals and their material issues. They have set up some quantifiable targets, right? And against these targets, only company talks about their performance. So your point fifth and sixth is covered with management and process disclosure. I now want to come on point seven, which is your director's responsibility statement. You can see on this slide. This says governance, leadership and oversight. This says please refer to the section MD and CEO statement, page number 20. Sir, this is one of a very critical statements. The integrity of your BRSR, the authenticity of your BRSR is demonstrated through this statement. And companies cannot see this is right. This example is right, where company says that we have a statement. Now, what this statement should talk about is also important. And for this, I would again want you to take it. I would again want like you to take you to the SEBI's advisory, because for all the companies I am seeing, I don't see a proper director responsibility statement coming up, which is this statement is as good as an assurance statement where director is committing themselves to why companies have been not been able to achieve targets, what makes their report to be more authentic. All these things comes in point 7. I think we should really look into SEBI's advisory, because this is one of the most prominent errors which we found it in a BRSR. I have to again, trouble you to take you to the SEBI's advisory note, because I think that, we have to genuinely look into what SEBI has asked us to. I hope it is visible on your screen, right? Chindu, I hope it's visible, na? The SEBI advisory.
Yes, sir.
Now look at it what it says. It says statement by director responsible for the report for to highlight ESG issues. The listed entity shall include a statement from the director who is responsible for preparation of the report. How many things they are expecting? Highlighting the relevance of sustainability to the organization. Such statement includes following overall vision and strategy, short term, medium term, long term in respect of managing the significant environmental and social impacts, strategic priorities and key topics for short and medium term, broader trends influencing the sustainable priorities of the entities, key events, achievements, and failures during the reporting period. See how important he has to talk about. And show me even 5 companies out of 1000 where directors have come out so specifically on them. Views on performance with respect to targets, outlook on organization's main challenges and targets, any other item pertaining to organization strategic report. And they have given a mandate also, either at the beginning of your BRSR report, which is fine, or under section B. So please, I think you have to, all people who have here joined from sustainability teams, please advise your board, your directors to issue a responsibility statement, because this drives the authenticity of the entire report. I'll go back. I'll go back to the presentation. So we are at, I think we are almost done with management and process disclosure, right? And I will now navigate you to the next milestones in next 15 minutes, which is the principle wise disclosure, right? We will go very quickly through it, and in last only now we will take up questions, right? So next is your principle one, which says business should govern themselves with integrity, manner that is ethical, transparent, and accountable. Commonly found error. I think companies, are not able to quantify the data in a right way. One, they're not able to quantify the total number of training programs which they have provided to each category. Also, cover 244 KMPs. I don't think a company will have 244 KMPs, right? Uh, to the topics and principles, most of the companies fails to specify this. Most of the companies fails to specify this. They write it subjectively, multiple. They, there are this data of training programs. Somehow the HR department of your companies, or where you are an assurance provider or a preparer, as an outside agency, I think you need to interact with the HR department in the beginning of the year to bifurcate training programs with, the topics of the principal also, and the frequency also. So this is one common common mistake which we realize, right? And here, uh, the topics and everything needs to come out very specifically, right? Sometimes you will see a lot of uh, problems, right? Employee other than BODs, KMPs in the quantification of this data. But I like this way of doing this. So this is the most appropriate way which is appearing on your screen, which is the BOD, the KMPs, the employees other than BODs, what all topics they have covered, right? They have tried to quantify it to a maximum extent. Another problem with principle one, and this was a common problem for the entire sustainability fraternity, I must say that, was reporting the indicator 9, which is the openness in business. And 60% of the companies, more than 60% of the companies whom we evaluated, their BRSR report concentration of purchases and concentration of sales, which is the openness in business. A problem which these companies, while we were preparing all these companies BRSR, I think the problem was not upgrading their accounting platforms or accounting systems. That was a top problem, and that is why they were not able to. They never categorized trading houses. They never categorized sales. At least through SAP, we were able to dig it out. Certain companies had confidentiality related issue, but one thing is sure that this is not a explain or comply basis KPI. This was an essential indicator, was expected to be reported, and I expect a lot of regulatory moves on not reporting this important KPI. I have a live demonstration that company has not reported, and I have a live demonstration that the company is able to quantify each and every aspect with respect to concentration of purchases, sales, and shares in their RPTs, right? But all in all, I think these two very important parameters were there on principle one side. One more thing which we missed from the last part, or I'll cover it next, right? The next pertains to the awareness programs of value chain partner. And now, as I was telling you previously, that India is on a verge where you not only have to train your value chain partners, you not only have to create awareness, but the top 150 companies have to actually quantify those 9 KPIs, right? So to capture those 9 KPIs, you had to do multiple, not only training programs, but you have to actually roll out some tech tool to your upstream and downstream supply chain partners. Unfortunately, as of now, 60-70% of our companies who are preparing BRSR were not able to extend any training to their value chain partners, were not even able to assess. Forget capturing of data, we are not even in a stage to assess our value chain partners. We are almost closing 2024-25, and if in your company value chain assessment has not begun with, you have not begun with it, assessment as well as now the reporting, then I don't think that this time you are reporting, you have to report it on explain basis only. The problem, two, three problems as in terms of assessment of value chain partners, which I want to, deliberate with you people here. Problem number one, we have not even started assessment of value chain. And the bigger problem is that regulator is expecting us to capture data from it. Problem number two, the tech tools which you are rolling out here are from foreign partners who are reporting as per CDP or GRI or as per the European KPIs. You have to develop your own in-house tool to capture this KPI and make sure that all those 9 parameters of your BRSR core is captured. Before that, you have to actually do 100% awareness of your suppliers to make sure that in case any loophole is there, you can fix it. So the process is you will start with assessment, number one. While assessment, then you will start doing their maturity. That is step number two. Based on maturity, you will provide them tech tools so that they are able to report BRSR core KPI with your human support, and all this becomes a part of your supplier development program. This will require huge budgets. huge manpower efforts. So not reporting is just not a problem. The problem is why not reporting? Because companies have not enoughly spent it on their supplier management programs. Had that be happening, I think it would have been little easy. You can look at, companies are reporting it nil. Any awareness program? No awareness program. So how will you report KPIs is a question which I think everybody on we are in November should ask. If even the programs were not done, then next year this is a pain point I told you in the beginning of the session also. But there are companies which have done fair awareness programs, right? Very clearly, they have done 5,301 vendors awareness program on all these 8, 9 topics, which forms certain topics also forms part of BRSR core KPI, and company were able to assist 99% of their value chain partners, at least assist. Now, while these companies go on capturing the data from their value chain partners, I think this will be easy because the company has invested on their supply development programs. But an important KPI, at least go back and check to your, check the BRSR which you have prepared, or you have assured on value chain partners, because the value chain partners from next year, the KPIs which are coming from your value chain partner also needs to be assured. So it's a huge, huge daunting task which we all have to do. Next, another commonly reporting problem, and this problem is that companies failed to disclose any nature of R&D and capex on their products or the technologies to improve environmental and social impacts of their products. As of now, this was completely subjective. Companies should have demonstrated this figure in a better way. The finance team, this pertains to the finance team only, should have put in more effort to capture this. The definition is so subjective that you can, include maximum portion of your R&D and capex into it. And I will tell you what is the advantage. When you look at the sustainability finance framework which India is coming up with, I think the entire funding will depend on the quantum of R&D and capex you are doing it for sustainable initiatives. So this entire table has a correlation with your sustainable finance framework. Thus, if you are eyeing green finance, if you are eyeing investments based on your sustainable technologies, I don't think the larger players should have left it blank. Also, see, this kind of a disclosure is entirely wrong, where it is written that given the nature of the sector in which bank operates, this question is not directly applicable. This is absolutely directly applicable. For all the R&D and capex, it's about how do you quantify this and how do you, allocate this to the products and processes which the banks is offering. So doable. The above one, again, no R&D. Look at the quantum of percentage. I think out of total capex, at least 70-80% in a in a company which is following good sustainable practices, this figure will be 70-80%. You look at Tata report, their R&D and capex is completely 100% because they were smart enough to comprehend that this has a correlation with their sustainability finance framework. I hope I am able to clarify this. Again, some more points, right? We were expected to talk about whether the inputs are sourced sustainably, then the percentage, right? Unfortunately, the percentage appears to be a lot of companies have either failed, not given the sustainable source percentage, not quantified it for certain products. Like the next company, they have quantified for certain products, right? But not all products, but they have still quantified it, right? They have quantified their agricultural produce in which they say that 48% were sold sustainably, right? So we see very less companies reporting these KPIs, reporting these percentages in a very, you know, in a very qualitative way, not a quantitative way. Please build systems. See, the problem is not only about wrong reporting. We have to accept it. The problem is about not having systems at grassroots level and not able to generate that kind of capacity. I understand it. I told you in the beginning of the session also that I completely understand your pain points. But the idea is when you look at your last year reports, have the companies now geared up to report it to a better extent or not? And these are essential indicators. These are not voluntary indicators. And are we waiting for some regulatory action to coming up? So what amuses me is that companies are talking very loud about their initiatives. They're putting up fantastic reports, visually aided graphic reports, beautiful stories. But when you look at their quantitative KPIs, they are not as per the story which has been depicted, which is called greenwashing. And this entire thing is now catching up the eyes of regulators. So whatever you are public, a commonly found error, I would say, and I and the entire sustainability board, we did this exercise that to what extent the data of the annual report does not matches the data to the BRSR report, you will be surprised to know. Companies claim different number of lives impacted in their BRSR report, and and at the same time when they present their value creation model, they present completely different number. So please be very sure of each and every number you are coming. Very sure. Next, I told you a major problem, right? The company is expected to now undertake life cycle assessments, otherwise allocating emissions on product basis as per GHG protocol will be very difficult unless you undertake life cycle assessment. Still, 90% of the companies have not even started to do life cycle assessments. And when you look at companies like Tata, or we have a excellent example of Asian Paints where they have at least 70% of the turnover, they have done a life cycle assessment from cradle to grave, which is a higher degree of assessment from cradle to gate, which means that the time has come, even though it is a leadership indicator, but your product, at least if you know that your product are high emission products, the life cycle assessment should have been done minimally from cradle to gate for at least major 3, 4, 5 products. But companies, again, in Indianized context, because it's a leadership indicator, companies might not be willing to invest that quantum of amount. So I think we might have to, eventually, we have a lot more points to discuss, but you see, I've given you the broader perspective. I'll take you through one, two, three more critical, important points, right? Uh, in respect of, the complaints, I think we have to really look into the data which are coming up. These are not great data, right? In terms of number of employees, right? Under coverage, look at this number. Completely wrong numbers, right? You look at what is the total number of male and female. This is just not corresponding. I think at least in terms of quantification of this data was very simple. In fact, when you punch this data in BRSR format, it automatically divides and do all these calculations. But I am showing you so many reporting errors, quantified and clerical errors, which also means that the reports were not proofreaded well. While you were publishing it, I think this have to undergo 3-4 times proofreading, because the problem is parallelly you are preparing a report and the stakeholder department is also giving you data. Could be a case that wrong reports are published. Maximum companies are not able to do it for less than 21 days to the AGM. So the working of this actually needs to start as soon as your financial year starts closing, especially pertaining to the human and social parameters. You will be able to avoid lot of errors here. So similarly, I think in terms of intensities, you may now start putting up your questions, because I think I'll be winding up couple of commonly found errors. One, in terms of, naturally, putting up data is another thing, but companies were not even able to demo, either they've not used right emission factors, or they have not used right conversion factors of IMF while they were calculating intensities. Companies have said that the intensities are not applicable to them, right? So, uh, these calculation errors were there from waste, water, and energy point of view of principle 6. You can see here the company has not even talked about their waste intensity. As per PPP, writing it not applicable. So there the problem is, so companies, if the most critical principle of your entire BRSR is principle 2 and principle 6. Principle 6 has 3-4 important things. One, you have to capture data of energy, you have to capture data of water, you have to capture data of waste, right? And you have to also capture your GHG emissions plus your water discharge. This entire principle 6 needs thorough validation of the input inventory sheets which you are maintaining. In output, whatever you are not reporting, for example, this company is not reporting waste intensity. That I can tell you, that you can also see. But I am telling you that lot of companies fail to report their intensities. Problem number one. Problem number two, I think a lot of companies fail to multiply with the wrong grid factor while they were converting their energies from megawatts to joules to intensity. The grid factors which they were expected to use, they used the wrong grid factor. And I think you have to use the authentic websites to it, because this completely changes if you are procuring your electricity from a grid which has both solar and uh, coal energy or coal generation, then the grid factor changes. Contrarily, if you are using, so you have to take that grid factor from the grid itself. So the quantification of your renewable energy and non-renewable energy is also a problem. Also, unfortunately, a lot of companies have started doing offsetting without having any regulatory advice to it. India does not have any regulatory advice to offsetting. Yes, as per GHG protocols, as per CDPs, as per the international standards, you are expected to offset, but to what extent is the question. So to the extent that you are not able to decarbonize, or you are not able to reduce it through your operations. So I think on that front also a lot of working needs to be done. If you go back, look back to your energy waste and water data, look back to your inventory sheets, I think you will realize it that there are a lot of loopholes in terms of what I am, explaining you here. And while you do an offsetting, this has to be done through a separate line item, which is not as per the format, the quantum of carbon you have or GHG you have offsetted, scope 1 and scope 2. So all these things specifically pertains to Principle 6, Principle 7, 8, 9 have been relatively easy for us. But you see, you see as basic mistakes as this. The waste generated not reported in totality, the intensity is not coming up. How do we even move to, and sometimes these reports are even assured reports. That's what make us fear that, whether companies are actually able to put that kind of energy and effort which is required to demonstrate an excellent BRSR report. Lastly, I think all those qualitative disclosures, right? Uh, I am in respect to zero liquid discharge, in respect to technology, in respect to emissions, right? Sometimes companies actually, these are why this is a commonly found error. This was applicable to this company. They have still not implemented it. Writing it not applicable, clearly demonstrating the intent to not, not be sensitive towards the regulator also, and not be sensitive towards uh, what is what is expected by them to eventually achieve the fancy targets, right? So I'll just take questions from here, and then we will try winding it up in terms of uh, Shivangi has uh, put up a question, and that's Shweta ma'am. The last question, I think we'll be able to take it up in paucity of time. All I am saying that uh, I hope the intent of the entire board and my deliberation was very clear. The intent was that this is not a comply explain basis mandate. This is a mandate which will require tremendous efforts from sustainability teams to pull out data. I know the volume is very humongous for certain entities, but at certain places, I and entire sustainability reporting board, we say an error is a commonly error in case there's a problem in an intent, in intent to report it in a most appropriate or a right way. So make sure that whatever errors, see, we could have find errors based on each principle and based on each KPI. That should not be a problem from, you might also be able to do this. But hopefully the idea was to, add uh, a lot of value to whatever we deliberated in last 1.5 hours, even in fact 2 hours. And lastly, Chindu, I request that, I request my participants, whatever questions have been unsolved, unresolved, with, specific feedback on whatever you expect sustainability board to do it for you, you can mail it to Shweta ma'am, Chindu, and Manish. You have the sustainability board's email ID. Put up your queries, put up, if you have any specific feedback to the session also, what changes you wanted, or what errors you wanted us to deliberate, we would have been happy doing it. I am immensely thankful and grateful for, the opportunity the board has provided me to deliberate over it. This was one of the first kind of its own sessions where, we just had glimpses of what is being happening, and also requesting Shweta ma'am that all our participants apply to the Sustainability Reporting Awards, where the last date of nomination is 15th, and to do a reality check also as to where do they stand on sustainability. Immensely thankful to you, to all the participants who have been hearing out since 2 hours. Thank you once again for patiently listening. It was indeed, I am very glad and happy connecting you uh, anytime. Please, you can mail it to sustainability board. We are sure that you will get some kind of an answer to all your ambiguities. Thank you once again. Thank you so much.
Thank you, sir. Thank you, Ankit, sir, for your insightful presentation on BRSR best practices, learning from common reporting errors. Your detailed overview of the BRSR framework from addressing common errors to implementing best practices has provided us with invaluable guidance on enhancing reporting accuracy. Your discussion on the challenges and solutions in the BRSR has enriched our understanding of how businesses can achieve more reliable and transparent sustainability reporting. Our heartfelt thanks also goes to the chairperson and vice chairman of SRSB for their unwavering support and guidance in organizing this impactful webinar. Your leadership continues to inspire us all in our mission to promote sustainability. Finally, we thank all participants for your active engagement throughout today's discussion. Your insights and questions have greatly contributed to the success of this event. Together, we have taken a meaningful steps towards fostering transparent and accurate sustainability reporting practices. Please stay connected with us for future webinars as we continue this journey towards better BRSR practices and sustainability excellence. Thank you once again for your participation. Take care and keep championing sustainability. Thank you, sir. Thank you for joining.
Thank you, sir.
Bye. Tech support, you can stop the recording now.